Is Bitcoin heading for a $110,000 local top in January? And could the global liquidity index be pointing the way? Well, let's discuss this exact idea. So, shout out to the guys over at Real Vision, Raul Powell, posting this chart here. The total liquidity index 12-week lead. Okay, so you can see black line on the chart here. This is the global liquidity index. Okay, we got up to about $124 trillion. Okay, now going through a corrective period. Okay, Bitcoin lags behind liquidity. Okay, money floods into the system and it floods over to Bitcoin. Takes a few weeks to get there, essentially. So the idea here is that we will continue to see December be a relatively bullish month for Bitcoin. We get up to 110K or something like that, maybe a little bit higher, before seeing an inevitable correction come in after an absolutely historic run for Bitcoin. Now, we've got some chart data to back up why that could be the case and why it's probably not so scary if it happens, okay? Just to keep in mind. Also, liquidity going to keep going up, guys. This is just a temporary pullback in liquidity, according to Raul and other analysts. But this is not a crazy thing to happen. Now, December, by the way, is generally, especially in this year of the cycle, a very bullish month for Bitcoin, where we see on average about 38% gains come in. Now, if that were to happen right now, we get up to $130,000, $125,000 or something like that, approximately, right? That would be a bit of an overshoot of the 110 estimate, but not by that much. Then, of course, a correction to follow. Liquidity leads everything. Now, we did a video about this the other day about how the big liquidity cycle is pointing towards a Bitcoin $200,000, $250,000 price target by the end of next year, or maybe a bit earlier than that. But regardless, liquidity set to keep rising here for a little while. Raul says potential correction below $70,000 only temporary due to an interim peak in liquidity, which he expects to continue rising into the third quarter of 2025. So if we see liquidity rise until, let's say September 2025, then that means we're going to see a final peak price for Bitcoin around probably, the usual time, October, November of the 4-year cycle. Could it really happen? Could it be that insanely simple? Be shocked about this. We do have so many theories, so much stuff. Just buy a year after the Bitcoin piece price spikes and then sell it 3 years later. It's crazy, man. Anyway, besides the point. The increase in liquidity from the Fed typically enhances market conditions for risk assets like Bitcoin. Historically, such liquidity injections led to increased investor interest in capital flows into cryptocurrencies. That's according to Alvin Khan, Chief Operating Officer of the BitGet wallet. Other analysts expecting global liquidity to peak not until the end of January 2026. If that were the case, it would break the 4-year cycle idea, and we'd see Bitcoin peaking in that scenario around like February or March of 2026, which would be crazy if that happened. Don't know if that's going to happen, but regardless, liquidity will go back up even if we have a short-term downturn in liquidity. Reminder, too, that we have massive buying going on, potentially from the USA soon. Nation state allegedly already front-running the USA. Bitcoin strategic reserve being proposed in Brazil. Someone in the Middle East probably buying. It's been absolutely crazy. And the balances on exchanges for Bitcoin, the Bitcoin available to buy on exchanges, is plummeting. At the same time, the price is soaring. FOMO is increasing big time. Now, we've got some charts to back up some of these price ideas here. I'm not saying it's the definitive path forward, but it actually fits in with what we've seen historically. Before we get to that, if you are a cryptocurrency trader looking for a great place to trade your crypto coins, you got to check out BitUnix. It is the spot to be trading right now. They have a no KYC, no VPN exchange, meaning that you can come over here, you can enjoy your trading privacy. Okay, I know that's a very tempting offer for many of you out there listening. So it's a no KYC exchange. They got all the top coins that you want to trade, Bitcoin, Ethereum, Solana, all the stuff, all the top meme coins, deep liquidity right across the board. Plus, they have an insane deal going on right now. You can get a $200 deposit rebate. So you put in $2,000, you get $200 back. If you want to test it with a smaller amount, you can put in $200, get $20 back, $500, and $50 back. You get the idea. Put in the $2,000, start trading, get $200 back, USDT, Plus, the more trading that you do, the more volume you put in, you'll get up to 6 Solana back as well, which is like crazy, crazy good deal. You need to do that by clicking the link down below. So step 1, click that link. Step 2, deposit your $2,000 or more. Step 3, get to trading. Get your 6 Solana bonus. Go check it out. Link down below. That's where I'm doing most of my trading these days, by the way. You'll love it. Check it out. Seriously. Okay, so back to the charts. The price of Bitcoin. Would a 30% dip in January really be such a crazy idea? Well, let's go back to 2017, after initial price breakout. We had about 8 weeks of up only, followed by a 37% dip, which lasted about 6 weeks. So there you go. Now, 2017 is a very different cycle. I feel like 2020, 2021 is much more in line with how today's cycle is in terms of liquidity and the total of just everything really going on in these markets. So let's talk about that, because it's actually perhaps even more instructional on what could or could not happen. You see, back here, we saw Bitcoin break out in mid-December. It rallied for 4 weeks straight, up 122%, followed by a 30% downturn. 30% downturn. Basically, the whole month of January, Bitcoin was down. Went down 30% in total from that local $42,000 peak, all the way back down 30%. So we had 4 weeks of up only, 4 weeks of correction consolidation before pushing higher again. That was a pretty normal situation. So in 2017, it was 8 weeks. 2020 into 2021, it was 4 weeks before we saw a major correction. So none of this stuff should be too surprising for anybody. Now, where are we at right now? Well, let's have a little look here. So currently, how far into this run are we? Well, right about here, we are only 5 weeks into the run. Now, we're seeing a bit of consolidation already during this period, okay? But it was real easy for us to pick up from that consolidation and push higher by the end of the month up to $110 or even $120,000, $25,000. Would not be that crazy. Historically, that would be the kind of price target we'd expect for December, okay? Okay. Now, if we were to get up to Raoul's target of around 110, then a 32% correction would bring us right back down to retest the yearly highs. The stink around here would be unbelievable if that happens. My goodness, people would lose their gosh darn minds. But in historical context, such a correction is not actually that crazy at all, and we should 100% expect to see 20 to 30% corrections throughout the bull market cycle for Bitcoin. It's normal. It's normal. Okay, you have to understand. This is part of the reason why we take our profits on the way up, because you never know when things are going to end. You never know when the next big correction is going to come in. You can't buy the dip if you don't have any chips, right? Right, okay. Now, interesting is what happened, if we go back again to 2020, 2021, what happened to altcoins during that time when Bitcoin had that 30% dip? Well, this is the others. So this is all crypto coins excluding the top 10. The others actually went up 150% in total market cap during that period. They went from a market cap of $50 billion up to $120 billion. Oh, so such a baby market back then. It's crazy. Obviously, things are a bit different now. We have $1 trillion others market cap or something like that. So much, much bigger these days, okay? Much bigger. Regardless, the point being, altcoins actually rallied during that period that Bitcoin had a massive correction. Even Ethereum went up 100% while Bitcoin was down 30%. Now, it's not to say that's definitively going to happen. Again, we could get to a situation where January comes, that liquidity is being pulled out of the system, Bitcoin corrects, and the whole crypto market tanks right along with it. We have seen very strong correlations on average. When Bitcoin tanks, the rest of the market tends to tank too. But if Bitcoin were to just have a slower grind down, it's not some sort of freak out event, you know, World War III or whatever, freaking everybody out that sends prices plummeting down, or just that sinking feeling from liquidity being pulled out of the system, then it's actually not that crazy, to be honest, that we could see altcoins continuing to grind up because, well, that's going to be where the action is until Bitcoin starts moving again. Wouldn't blow my mind at all. if that were to happen. Okay, so these are the scenarios where that could happen. Historically, it's not crazy to see a 30% correction for Bitcoin, or even a 20% correction. Maybe it's too big for a 30% correction. Maybe we'll get 20% these days. But none of that is crazy. And we have seen strong correlations of Bitcoin to the M2 money supply. It's not always perfect, but it has been correlating a lot more recently, much closer to the price of Bitcoin. There has been times where it has not performed with that sort of direct correlation, but the times of uncorrelation are rarer and the times of correlation are more common. Now, the good news, even if there is a short-term correction in January, if Raoul's right and this sort of historical precedence does play out, which wouldn't blow my mind at all, and altcoins could still perform during that time, if that does happen, it's just a bump, a bit of turbulence, a pit stop for Bitcoin, because here's the deal. Now, this is a chart that Cointelegraph sharing by Jamie Coots. And this is that Bitcoin could attract $2 trillion in investments by 2025, or by the end of 2025, as the global money supply increases by $20 trillion. So even if we're seeing a short-term correction in liquidity by a few $1 trillion, the total idea is that the money supply is going to go up by $20 trillion, and that Bitcoin could capture about 10% of that move, okay? Why do they say that? Because global M2 bottomed at $94 trillion in Q4 2022. It has since climbed to $105 trillion during this period. Bitcoin's market cap 5x'd, adding $1.5 trillion. In other words, 10% of the new money supply has leaked from the fiat system into the emerging global reserve asset of Bitcoin. Of course, other people are saying, well, it could be a bit further out, right? Global money supply could peak in actually 2026. Again, Jamie here is saying that. So it's uncertain exactly when we're going to see this peaking, but global money supply largely assumed to keep going up throughout 2025, which should be good for Bitcoin. And what's good for the goose, the golden goose Bitcoin here, is good for the gander, the altcoins. Okay, so let me know what you think. Is Raoul's theory on spot here? Are we likely to see this kind of 20-30% correction coming in January because of this slowdown in global liquidity? And is the slowdown in global liquidity just a temporary moment, or is it all over? Run for the hills. Let me know what you think down below in the comment section. See you next time. Peace.